secondary market, let's shift focus to the primary market. Saatvik Green Energy, the company's IPO opens up for subscription today. We're joined by the MD, Manik, Garg, to discuss three key focal points. The most important one, the peak returns behind the industry. Is localization as a scheme helping, and the export opportunity for the company as well? Thanks a lot for joining in, Manik, and always a pleasure having a guest in the studio, but more so when they're at the opportune time for the IPO, the public market. So we'll obviously have these conversations a lot more once you're listed. But I'm looking at you raising funds and some of the things that you will do with those money. You have around 4 gigawatts PV module manufacturing facility for which you'll be spending about 500 crore rupees. And you'll be investing in a subsidiary for 165 crores for debt repayment. Two-part question. What is the asset turnover on this PV module manufacturing facility for the 477 crore rupees that you invest? And with the 165 crore debt repayment that you do on a consolidated basis, what does your debt come down to?
Right. First of all, thank you, Nigel and Mangalam, for inviting me to the show. It's a pleasure to be here in the studio. And so regarding the IPO proceeds the 700 crores that we are raising as a primary issue, most of it is going towards the capex plans of establishing a 4 gigawatt solar PV module facility that we are putting up in Odisha, Gopalpur. Mm-hmm. So currently, as a company, we are at 4.8 gigawatt of module manufacturing capacity, and if you see our return on capital employed, it's over 60% for the last year as well. So we aim to establish and sort of maintain that position as we expand our module manufacturing capacities. And that is the kind of asset turnover ratios that we're looking at in terms of revenues. You've seen that we've grown consistently, and that is the same trajectory that we aim at.
So roughly a 500 crore investment would yield an EBITDA of 250 to 300 crores?
See, again, I can't.
I'm just doing the back calculation. You spoke about the ROCE.
Yeah. So the trajectory that you've seen in the past 2 years in terms of the capacity utilization that we have had in terms of the overall capacities that we have. So the forward-looking numbers I can't comment on directly, but yeah, the past numbers can give you a guidance of how the future will look like.
All right. Good to have you in the studio, Manik. Give us a few more details then. What does your capacity go to? Post this, capex that you're undertaking, point number one. Point number two is, with regard to the debt, you're going to be repaying some debt, right, to buy the subsidiary. Mm-hmm. So what is the total debt in the books, and how much does it come down to?
Sure. So let me first get on to the debt. So currently, a long-term debt stands at around 450 odd crores on the books.
That includes the debt in all your subsidiaries as well?
It includes the overall debt in the subsidiary as well, and it includes the working capital limits as well. So the long-term debt is about 170 odd crores, which we're completely repaying through the IPO. So post the IPO, we won't have any long-term debt on the books as of now. The only working capital fund-based limits will be there as part of the debt.
170 crores, right?
Yeah, 176 crores, yeah.
So around 17 crores of interest saving is what we could see.
Absolutely.
Perfect. Let's get to the capacity.
Yeah, in terms of capacity, we are currently, like I mentioned, 4.8. Another 4 gigawatt of modules will bring us to 8.8 gigawatt of module capacities. And as far as cell is concerned, we are also backward integrating into cell manufacturing, which is 4.8 gigawatt. And all these capacities will be operational by FY27.
So what does that take your overall revenue and margins to? Because there will be backward integration. So I suppose there'll be a couple of 100 basis points at least in terms of margin levers. Then you have, your capacity, which is near doubling.
Right.
So does that mean your revenues also go to that extent? Because over the last 1 year or so, we've seen obviously your revenues double. But that typically happens when a company comes in for an IPO.
Right.
Numbers look incredible. Post-IPO, a few quarters, what are we looking at? FY27 when the entire, shebang is on the street.
Right. No, that's a very valid point. But I think for us, IPO was not the reason why we're doing so well. I think it's more about the way we work in terms of our capacity utilization, our diversified customer base, and I think that will continue to help us in we will be able to leverage all of those things to establish and keep.
So at peak, what is the potential? How many, what proportion of your margin savings are ahead of you, and what kind of revenue scale can you see at peak? We're not asking for a forward-looking number,
right?
But what is a potential? You can give us a rough range.
Yeah,
and you could give us also a revenue potential.
Yes,
you did 2,200 crores last year.
Yeah.
You're putting up this big capex. You're sounding very optimistic about the asset turn and the likes. So at peak potential, at current prices, what can you do?
Right. So if you see current prices, they range around 15 to 16,000 rupees per kilowatt. So that can give you sort of at a current capacity utilization, that can give you an indication of the kind of revenue that the company can generate with the future capex.
Revenue potential is fine. The regulator also is okay with it. You could tell us the potential revenue from around 2,200 crores. The potential. We're not asking you forward.
Yeah. So with an 8.8 gigawatt and with the current capacity utilization, if we see, then we can go up to 10,000 crores in the coming years. Yeah.
Okay. And what about the margin levers? Because of the backward integration, your margins were what, mid-teens? How much better can they get from here?
Yeah. So in terms of margins, again, this is a fluctuating market in terms of backward integration. And right now, if we see our peers who already executed cell projects, we see their margins crossing the 20% mark. So I think if not, and as per our estimates, not a lot of cell capacities will come online by FY27. So the margins can be in that range.
All right, so high teens at least, if not 20%.
Yeah.
But I think the 10,000 crore number also that you're talking is a little conservative, because I multiply 15,000 by 8.8 gigawatts, 15,000 per kilowatt. The basic number that I get is 13,200 crores.
Yeah, but
assuming you lower utilization.
Yeah, 75 to 80% is the industry utilization, though we are one of the best, but still have to be conservative.
That's 9,900. All right.
You want to give us a rough market share number?
See, market share again.
Back of an envelope calculation, according to what your internal team has projected.
Right.
You know, if you could give us a sense about that, and also the Chinese competition, right? What was it, say, a few years ago? Do you think now we can battle them easily with the kind of protection that we've got as well, and the way ahead?
Yeah, I think in terms of competition from China, definitely. In terms of just pure play modules, I think we are almost at par with China in terms of operational efficiency and operational cost, as well as technology. So I think we can totally battle that, given the fact that the government is supporting the industry. And sorry, what was
your market share?
Market share, we were at 5 to 7. We were at 5 to 7% for this fiscal, and I think we can defend that market share easily.
Just one number before we let you go. I'm looking at your order book. The domestic order book is just about 4 gigawatts. For all the other peers, their order book actually is a lot higher than their current capacity, and you are announcing capacity while your order book is less than that. So just trying to figure out, are you expecting some order wins in the very near future?
Yeah, so by now you must have understood we were a very conservative company, in terms of how we do business. We only consider orders where we have a financial commitment. That is the confirmed order book that we consider. And at the same time, this order book does not consider a channel and spot sales revenue, which contribute around 30 to 35% of our overall sales.
Okay, all right, Manik, appreciate you joining in. Thanks a lot for giving us some fair color with regard to your company, as well as how do you see the industry pan out. All the best for the IPO.
Thank you so much.
On listing, you're back on Chartbusters at 10:30 a.m. and we'll try to squeeze you a little bit more for some numbers. Thanks a lot.
Absolutely.
Thanks a
so
lot
much.
for joining in.
Pleasure to be here.
We'll slip into a short break. On the other side, we'll have another IPO. GK Energy will be coming in with details of their IPO. So stay tuned. It's an action-packed show.